So many of you asked me to do an analysis on Microsoft stock and try to determine a fair value for Microsoft and to see if the stock is a buy in general. And I have been trying not to do any analysis on Microsoft or most of the tech companies, mainly because I stick to whatever I understand best, and I personally don't really understand, the potential of what AI is going to do or how cryptocurrency is going to go to the moon and all those type of things, the cloud and all the fancy tech. I'm not really comfortable with it, so I try to stay away from things I don't understand. And Warren Buffett said it best, and he said, I don't look to jump over 7-foot bars. I look for around 1-foot bars that I can step over, and this is what I try to do on the channel. I don't try to be an expert in pretty much everything like many people try to pretend. So in this video I can't tell you what ChatGPT is going to do, or if the ChatGPT is better than whatever Google has, or who's gonna win the AI war. I don't have any insights on that, but what I can do, I can go through the financials and try to determine a fair value through my valuation model, and this is what I'm gonna do in this video, so I really hope you enjoy it. Now, looking at the latest income statement for Microsoft, and we look at the products have actually declined from 2021 to 2022 on the 3 months December ended. And this is mainly because of the computers and the PCs slowing down a lot. And Microsoft has very high exposure to this industry, so many of the businesses that they actually own. And this is an example to what's happening to the PC shipments pretty much worldwide. Apple's PC shipments declined around 40%, Dell declined 31%, Lenovo declined 30%. So it's pretty ugly for this segment right now, and this is pretty much the worst segment for Microsoft. It's the lowest margin, it's the most cyclical. Now the services and other have kept growing, and this is pretty much the best of Microsoft, the best business models, the highest margins, the highest growth. So I really like this segment from Microsoft, and I'm not a big fan of the products, although they still generate pretty good free cash flow. I think they're going to continue to decline in 2023 and maybe recover with the economy in 2024 and later. And this has caused Microsoft to actually decline in net income. So net income was around 18.7 billion. It went to pretty close to 16.4 billion, and this was largely due to the PC, products and stuff slowing down, and a little bit increase in expenses. Although Microsoft has managed expenses, much better than I actually expected. Now, taking another look at the biggest problem with the tech companies like Google, Apple, Microsoft, although Apple is the best of them, and this is maybe why Warren Buffett bought Apple, is if you look at the shares outstanding of most of those companies, you always hear them saying they're buying back stock, $50 billion buyback, $100 billion buyback, yet most of the shares outstanding either barely go down or they don't even go down at all. And this is for one simple reason, and this is the stock-based compensation, which is really going crazy with these tech companies, and especially Microsoft. Google has some of the same issues. Other companies have same issues. Apple also has the same issues, but if you look at Apple's shares outstanding, they actually could see a straight down line, and they decline much more than other companies, tech companies, year on year. Maybe this is why Warren Buffett, one of the reasons why Warren Buffett chose Apple. But if you look at the stock-based compensation of Microsoft, is getting out of control, and this is something that shareholders have to pay attention to, because it really hurts, long-term performance, in my personal opinion. Looking at a basic PE ratio on the historical metrics, it's trading now around 32 times earnings. Now, it traded at a mean of 30.7 time earnings, so it's a little bit above the mean. You're not paying any cheap price if you're buying Microsoft right now. Looking at a forward PE basis, it's 29 times earnings, and the mean was 23 times earnings. So you're paying much higher than what you used to pay around 2017, 2018, but you're paying much less than what you were paying after the March 2020 crash around 2021 to 2022. But this is a big mistake that people make, is they just look at the PE ratio, they think it's higher than the historical average, so they immediately say that the company is overvalued. But they don't look at other metrics of the company, like the return on capital. The return on capital for Microsoft went from 15% to 34%. This is a massive expansion from 2017. So of course, I personally believe that Microsoft deserves a higher multiple than what it had in 2017. It was trading at 23 times earnings. The return on capital went from 15% to 34, more than doubled. So the PE ratio has to be around 26, 27 times earnings. Now it's sitting around 29, which makes Microsoft not actually as expensive as most people believe. I still believe it's somewhat of an expensive stock, but this is why I'm going to use my own valuation model to determine a fair value for Microsoft, a price where we can buy Microsoft and potentially double our money in the next 3 to 5 years, because this is what I look for in the market. I analyze the next 5 years and I try to double my money every 5 years. And if I cannot do that, I normally ignore the investment. And this is what I used for Microsoft. They made $198 billion of revenue in 2022. I used 5% for 2023 and 12% sustained from 2024 to 2027. And this is pretty much in line with the analyst estimates, and they actually could grow more than 5% in 2023, mainly because the dollar was a big headwind for them in 2022. You could look at their currency adjusted returns. The currency shaved off like 6 or 7% of the growth. So I put in 5% for 2023 and around the 12% sustained from 2024 to 2027. And I believe this is a pretty fair estimate, and maybe ChatGPT and the whole AI stuff, which I don't have a big understanding in, maybe they can drive a lot of the revenue growth for Microsoft and it could ended up being above 12%. But I think 12% is a fair number to use. Net income margin is 35%. So I kept it at 35%. For the P ratio, I took 30 times earnings, and this is the mean multiple over the past 10 years for Microsoft. It traded as high as 78 times earnings, and it traded as low as 12 times earnings, which I don't think we could ever see again, in my opinion. And now sitting at 32 times, so I'm putting in a multiple contraction for the company. And we're also going to look at other, case scenarios. But taking the 30 times earning and the 1% yearly dividend for the next 5 years, the upside on the stock is 65% over the next 5 years, or 11% compounded every single year for the next 5 years. Now, if you're looking for such return with a company, I think Microsoft is not a bad buy. But as I look to double my money over the next 5 years, Microsoft, for me personally, is not a buy. And if I want to get a double over the next 5 years, I have to buy Microsoft around $230 per share. And $230 per share is pretty close to, where it pretty much bottomed at. It bottomed around 213. I believe it was a pretty good buy around 213. But my valuation model says around $230 per share. But even at 230, I would not personally go all into Microsoft, because maybe Microsoft doesn't trade at 30 times earnings 5 years from now. Maybe it trades at 25 times earnings. If that was the case, then $230 is even an expensive price for Microsoft. But I believe 230 is a good starter position for Microsoft, where someone can open a position and dollar cost average down into the company. But I think people that are buying right now, you could get around an 11% return if Microsoft trades at 30 times earnings, and maybe you're buying it just because everyone wants it right now with the ChatGPT and stuff, which is normally not the best time to buy it. The best time to buy it is whenever you have extreme fear around the industry, like we had a few months ago. And now I don't see extreme, fear around, which might not be the best time to buy it, but 11% return per year is not bad. And you make your decision for yourself. This was not financial advice. I was just, talking about my thesis on Microsoft. So I hope you enjoyed this video. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.